Again, welcome to this evening's broadcast. Every week we talk about financial planning and different solutions. So tonight's topic is going to be planning for your final expenses. Here with me this evening, I have Joe Johnson, President of Senior Solutions. And so Joe, I'm going to go ahead and turn over the program to you, and then I'll just chime in as needed, or if you want to ask a question. And at the end, we'll save a few minutes for participants to raise their hand or ask a question.
Perfect. Thanks, Jimmy. Hey, thanks for the opportunity, man, for me to be able to get on and talk about something that I'm certainly very passionate about. I've been in the final expense arena for well over 10 years now, and it's something that I'm certainly very passionate about, helping folks find out or work and find the best solutions to those end-of-life needs. Let's make sure I can share my screen. So I want to pull up a PowerPoint. I want to make sure maybe you could walk me through what do I need to do to show or share my screen?
On the bottom, there should be a little green button that says Share Screen. And you should be able to click that.
Okay.
And you
let's see.
Would want to pull your PowerPoint up as well.
Okay. So I just click share.
Yep. There we go. I can see your computer desktop.
Oh, great. Okay.
So all you got to do is open your PowerPoint.
Well. See if this will work. Been having some little bit of computer issues, so just bear with me. Let me get this in full screen. How are we looking there, Jimmy? Am I full screen?
We're perfect.
Awesome. All right, ladies and gentlemen. Well, today's topic and what Jimmy really wanted me to speak on is our final expenses. And what I want to do just for a second is really just kind of talk about, what are final expenses? And there's really kind of two parts of it. And I think when we think about final expenses, we think more about the financial planning side of final expenses. But really, there's kind of two components to making sure that final expenses are taken care of properly. And both of them are extremely important, and they really need to work in conjunction with one another. The first thing that we're just going to talk about very, very briefly, and then we're going to hop right into the financial planning part of it. The first part is really about helping your family deal with the emotional side of it, kind of the emotional burden or the grieving part. And at the end of the day, listen, I know that nobody likes to talk about their own demise or about their death. But the worst thing that you can possibly do is procrastinate on this subject and wait until it is the end of life. And I don't know if you've ever had to deal with this personally. I know I did with my father when he was passing away, is that we had a little bit of money set aside for the final expenses to take care of the burial, but we really didn't do any pre-planning. In other words, we didn't know what type of service to have, or are we going to do a traditional burial or cremation? And certainly that's not something that you want to have that discussion while someone is sick and they're not feeling well, or God forbid that somebody passes away unexpectedly and they haven't done any pre-planning. I don't know if you've ever dealt with that personally with a family member, but it really adds to the grieving process when you have a family member that has passed away and the family is really undecided as far as what's going to have happen. Did they have something in place that talked about whether or not they wanted a traditional plan, or maybe they just wanted something very economical, like a very simple cremation and a celebration of life. And that's just one thing I urge everybody on this call today, is that Listen, our time on this planet is very special, and nobody really knows what God has in store and when we're going to leave. So I simply ask for everybody just to take some very simple steps and plan for the future and help your family really ease through the grieving process. One of the things that you can certainly do that will help with that is do something as simple as putting together a last wishes or what we refer to as a memorial guide. And these are something you can contact Jimmy and he can email you some information or drop something in the mail. But if you would just take 20 to 30 minutes and do just a little bit of pre-planning to really give your family that peace of mind that they deserve, I'm just telling you, it really, really goes a long way. Because even if you have money already set aside and you've got let's say a financial plan, life insurance, or maybe you've got a nest egg in the bank that's earmarked especially for final expenses, the thing about it is that your family needs to know what that money is supposed to do. What are your last wishes? And you certainly don't want to wait to the very end. I'm going to give you just an example, just a quick snapshot of one of the memorial guides that we share with our clients. And this is something certainly Jimmy has access to. It's called a My Wishes record keeper or a memorial guide. And if you look at the page to the left, it just says "to my family." This is kind of a statement that you can that your family will read. You can sign it, and you can really kind of go through and kind of lay out some things that are very, very important. But it just simply says is that my goal is to make it easy as possible for what is probably a difficult time. I know you have many decisions to make on my behalf, and I hope this information will be helpful. So as you can see, it really just talks about your name. It gives your family your social security number, of course, your address, where you were born, the type of work that you did. It even goes into your marital status, who you're married to, your parents, your father's name, where was your father born, did you ever serve in the military, what branch, what was your rank, any type of designation there. These are really the types of things that when someone passes away and you go meet with the funeral director, these are the things that they're going to be asking in order to put the end of life service together and also to get that the obituary done as well. Just kind of move on with some of the other pages. And what I really like about this memorial guide, it really goes into detail. Now I'm only showing you just a handful of pages. This memorial guide is it's not lengthy, but it's not too long, but I think it's just the right size as far as the information. And you can share with your family, where did you go to school? They may not know where you went to grammar school or elementary school, any special clubs or organizations that you belong to, social media. I bet you pretty much everybody on this call tonight probably has a Facebook page. Well, God forbid that we pass away prematurely. It would be nice to know if your family had the logins to things like your Facebook page, any type of digital assets, special people to contact. Maybe there's some folks that you've been out of touch for a while that you'd want your family to get in touch with. Who are your advisors? Do you have an attorney, an accountant, a financial advisor, an insurance agent? Who's your physician? If you're employed, your employer information. These are all just little important details that's so important, but I'm just telling you, it really goes a long way. And then you can go into some of your finances. Make it easy on your family so they don't have to search through drawers and drawers and file cabinets to find out where all your money was hidden. If you kind of have it all laid out, your banking, checking, savings, if you have a brokerage account, lay these things out with the account number so it's easy for your family to be able to contact your advisor and your insurance agent. Also with the memorial service, Have you done any pre-planning? Is there a particular funeral home that you would like to use? Have you done any type of pre-arrangements? What type of service would you like? Um, if you're going to have a burial, who would you like your pallbearers to be? Any special request? If there's going to be a viewing, you may have a favorite dress or a suit. If you were in the military, maybe you've got that old military uniform laying around. Well, maybe you'd like to be buried in your dress blues if you were a Marine. Eulogy, music, prayers. There's so many things that you could put into this little memorial guide that I'm just telling you, you definitely don't want to wait until the end. This is you don't want to wait till it's too late, or you don't want to certainly be having this conversation with someone if they have fallen sick and the prognosis is not good. Do it while you're healthy. Do it while you have good vision and good peace of mind. Just a few other things, and then we'll get right into the financial planning of how to properly fund a program to take care of your final expenses. But your last wishes, you can write little sentences or paragraphs about, your early life. What were your hopes and dreams, your career, your favorite hobbies, your favorite places that you ever traveled? What are your greatest accomplishments? What are you most proud of? What are some of your fondest memories? And you can list out some family history, and then also list in any final thoughts or any special instructions. And I think this is a really big part of final expense planning. And certainly it's part of our practice when our agents are going out and meeting with clients. It's not just about taking care of the financial part. It's making sure that this part is done as well, because I promise you, this part is just as important as making sure that the finances are in line. This will save your family a lot of headache. It'll save them a lot of bickering or arguing. I've seen it with families where someone's passed away unexpectedly, and then that creates a big argument because part of the family wants to do cremation. The other part says, no, I know they want it to be buried. So just make it easy on your family and put together something very simple, utilizing one of these My Wishes memorial guide. Jimmy, anything you'd like to add in regards to maybe doing a little bit of pre-planning?
Well, I think you said it best, and you covered a lot of the emotional stuff.
Yeah.
Because I remember, just recently last year, my uncle passed, and I was at the funeral home helping make those arrangements with my cousin. And a lot of these type of questions, we just kind of looked at each other, and, we just had to do the best that we could. And, it would have been better to have this stuff available to us ahead of time. One thing, I don't think you showed it, or maybe you might have showed it, I missed it, but there is part of this booklet does, and you're able to answer those questions, whether you want a burial or a cremation, or what type of memorial service you want.
That is on this page where it says memorial service.
So it does have that information as well. But really those first few pages that Joe showed, you wouldn't think how important that is until that actual time comes and it's laid out for you. Because in some cases you're very emotional, you can't really think, you can't concentrate, you can't focus. And when it's filled out ahead of time, it makes things much easier.
Yeah, it certainly helps with the emotional side in the grieving process if everything is laid out. And then the second part, let's say, we've done a really good job of pre-planning. You know exactly what you want to have happen, and you've laid out some very specific instructions for your family. Then you've got to figure out what is the best way to actually fund this, okay? There's a couple of different schools of thoughts on this, but here's what I'm going to tell you tonight is that unequivocally, there is no better way to transfer money to your relatives or your heirs specifically for final expenses other than life insurance. There's a tremendous amount of benefits with life insurance, but one of the big things about life insurance is that it supersedes any type of will that's out there. It avoids any type of probate. It's a direct contract between you and the insurance company and your beneficiary. Okay, so it will eliminate any infighting with family. You designate that beneficiary, or it could even be multiple beneficiaries with contingent beneficiaries. You can even do an irrevocable beneficiary as well. So it's a great way to be able to make sure that those funds are available immediately. I'll just tell you this, Jimmy. I had a client that I sold a policy to probably close to 7 years ago. And she just recently passed away about a week ago. Very sad. Somebody I had gotten very close with, very good client. And I helped her granddaughter actually was named as the beneficiary. And when I called the insurance company to do the claim, I figured they were going to ask, you have to mail out the paperwork, ask for the death certificate, get a copy of maybe an obituary. I was amazed. They said, oh, it's a totally paperless system. And within 24 hours, they had a check cut and sent out to the beneficiary. So it's, I wasn't expecting that. It was a lot quicker and, very, very efficient. All I really had to do is just provide the name of the funeral home, and it was done very, very quickly. But folks, one of the things that we want to talk about initially, and probably this is my number one way and my I would say the best way to really fund a financial plan or a final expenses is to go ahead and do what we refer to is a single premium whole life policy. And if you're not familiar with single premium whole life, I'll simply explain it. Traditionally, when we purchase a whole life insurance policy, we're probably used to, you pick out a face amount, whether it's, 10,000 or 100,000 or whatever the amount is going to be. And you simply make monthly or annual contributions to that policy. And in a traditional whole life, you usually pay onto that policy until age 100. And then it is completely paid up. With a single premium, it's done a little bit different. It works out great for taking care of end-of-life needs because all you need to do is write one simple check. And I'm going to show you right here this first example that we're going to use. And we're going to be talking about a client, a male, age 55. And in this particular scenario, my client has an initial premium. In other words, they have $30,000 in cash. They're simply going to write a check to the insurance company for $30,000, and in return, that $30,000 is going to provide the client with $66,328 of benefit. That's over 2 times the amount of the initial deposit. So you can see the client writes a check for $30,000. God forbid you pass away tomorrow, they're immediately paying out $66,000 of death benefit. Now we're using male age 55. If you were a little bit older, if you were 65 or 70, it's going to be a little bit reduced. And if an example, if you are a female age 55, that would I don't have the exact number, but probably get you close to $71,000 or $72,000 of insurance. As everybody's well aware of, the ladies tend to outlive the men a little bit. Just to show you how this would work, and what I really like about doing a single premium is that you are really very liquid, really from the very, very start. If something were to happen and you really felt like you made a mistake and you wanted to pull out the $30,000, or maybe it's 10 years from now and you feel like that you need the cash more than you need the insurance, this is a relatively liquid policy that allows you to have access to the funds. As an example, uh, 15 years later, let's say you took the policy out at age 55, at age 70, your cash value actually would have grown to 37,142. What does that mean? That means that's how much money you have access into the policy. If you wanted to borrow some, you could borrow a portion of that. Or if you simply wanted to cash out, you would actually get your initial premium back plus an extra $7,142 in cash. Now, if you notice on the right-hand side, in this particular policy, in this illustration, the death benefit is not increasing. This is going to provide a level death benefit all the way until the very end. At age 80, your cash value, if you needed access, would be $47,939. Age 90, you actually have $56,000 available in cash. And if you make it to the ripe old age of 100, now keep in mind, this policy will never expire. I'm just simply showing the age 100. You could live to age 121. It would still be in force. But at age 100, $61,000 in cash or a death benefit of $66,000. Okay, now this is a single premium whole life. In most cases, you can do an initial premium as low as $10,000, all the way up to $100,000 plus. But typically, when we're talking about using single premium specifically for end of life and final expenses, usually we're looking at initial premiums of 10 to 15 up to 20 to 30,000, just really depending on what your needs are and your current age as well. The older you are, obviously, that maybe a little bit more initial premium would be needed. Jimmy, the second thing I want to talk about is doing what we...
Before you move on, can we back up for a second?
Oh, sure.
Are you able to do that?
Yeah.
Okay, so what I wanted to comment here is because I've worked quite a bit with people on this. A lot of the clients that I work with, they have money in the bank, they have assets, they could have, a brokerage account, they have different liquid assets. And so in many cases, they're thinking, well, I don't need any life insurance for my final expenses because we got the money to pay for it. But they're missing two things. One, sometimes depending on who their bank is or the financial firm that's holding those funds, sometimes what happens is it gets held up until they A, get a death certificate, or B, it goes through probate, because if somebody contests anything, there could be all kinds of issues, right? So what Joe was mentioning earlier about life insurance bypasses all that. This is a very efficient way of making sure that those funds are available to take care of those final expenses. Not to mention that, in this particular scenario, you're more than doubling the death benefit. So if you only needed, let's say, $30,000 to make sure you covered all your arrangements, well, then you'd probably be depositing a little bit less than $15,000 if you're that male age 55. So you can take a piece of what you already have in your bank account that you had set aside, like Joe said, earmarked for final expense, but now you're able to get a greater death benefit out of it, and it's passing to your family 100% tax-free. The other big thing I want to point out is that this particular policy, the interest that's accumulating on that cash value is a fixed rate of 4.5%. So you can't get that at the bank. So if you did have this in a bank account, a savings, or even a CD, you're not going to get 4.5% in today's market. But this is a quick way to go ahead and guarantee you, cash value. So like Joe said, 10, 15 years from now, decide that you want to go ahead and take some of that money out or take all of it out, well, you earn 4.5% on your money. So I think this is a really, really good solution financially. The numbers just totally make sense. So Joe, I'll turn the show back over to you.
Oh, Jimmy, did we forget to mention that life insurance death benefit is tax-free?
We did forget to mention that.
So, I mean, even if you had the $30,000 in cash and you were earning a great rate of return, there's obviously going to be, tax implications on that. The great thing about life insurance, folks, is that the on life insurance death benefits, it is 100% tax free to your beneficiary. So you write a check for $30,000, they get $66,000, 100% tax free or not reported to the IRS, which is tremendous. And I know just about out of time. Do we have time to look at one more
Sure,
option?
yeah, we can extend it. We're not going to cut off automatically or anything like that.
All right. Well, this was the main time. I mean, the single premium whole life is really, a great way to fund a final expense plan. My second favorite way, besides a single premium, is something, Jimmy, that we refer to as a 10-pay whole life. It's still a whole life insurance policy, but instead of paying for it all in one lump sum, we simply make 10 years of contributions, and the policy is totally paid up. In this scenario, we're going to go ahead and stick with the male, age 55. Now, instead of an initial premium of $30,000, we're just going to do a death benefit of $30,000, which is in most cases going to be more than enough to cover any final expenses, plus have money left over as well. In this particular scenario, in order to properly fund the program, the client would simply need to fund it with $1,790. That's an annual premium. Usually we do annual premiums. You could also do it monthly. I think it would be probably, I'd say somewhere about $150 per month. What I'm going to do is I'm going to go ahead and jump ahead and show after you've been into the policy for 15 years. So at age 70, as you can see, the death benefit has actually grown. You've gone from $30,000. The death benefit is now $33,546. And the reason why the death benefit is actually increasing is because this is what we refer to as a participating whole life with dividends. And simply what we're doing is we're using those dividends to actually purchase paid up insurance. Now, if you'd rather, receive a check in the mail for, a couple $100 a year, whatever it is, you could certainly do that. But in most cases, what most clients do, they just use the dividends to go ahead and purchase paid up insurance. So in this particular scenario, at age 70, we have a death benefit of $33,546. The client would have paid in a total of $17,900 in premium. That was over a 10-year period. So they'll never pay more into this policy, more than $17,900. And actually, it's already gained more cash value than what the client initially put in. So even at age 70, if this client decided, you know what, I really need access to my funds, they have access to $18,646. By age 80, the policy has grown in death benefit in a total of $5,000. So you now have $35,509 of life insurance benefit. Of course, the premium, remember, we only put in $17,900. The cash value has now grown to $25,665. At age 90, if you make it to age 90, the policy is now worth $37,936. And then all the way to the far right, the cash value is up to $32,560. And last scenario, age 100. If you make it to age 100, congratulations. That policy is worth over $40,000 in tax-free benefit and has cash value of $37,847. Jimmy, there's also another option called a 20-pay, which is simply, it's pretty much the same as a 10-pay, but you spread it out over 20 years. And what that allows the client to do is, if they're on a, let's say, more of a little bit of a tighter budget, it allows them to contribute less money into the policy, but it allows them to get similar results as far as the death benefit and the cash value as well. But for the sake of time, I think the two biggest things that we wanted to show on how to fund a proper final expense is showing that single premium, and then also this 10-pay whole life.
Thank you, Joe. Well, the thing that I love about this the most is, financially, it totally makes sense. On this 10 pay, I mean, you're covered from day one for the death benefit. So even if, you only made one premium payment, the death benefit's still going to be $30,000 if something happened unexpectedly. But worst case scenario, I shouldn't say worst case scenario, I should say, hopefully you live those 10 years, right? And the most you would pay into it would be 17,900. So from a numbers perspective, you max out paying 17,900, but the death benefit at that point has increased to 33,000. So as far as numbers go, you're way ahead of the ball game.
Yeah, you'll never pay more into the policy than what it's worth.
Exactly. And obviously, the premium cost is going to vary depending on your age and your health, whether you're a smoker, non-smoker, stuff like that. But this is definitely, I think, the best way to fund your final expense plan. We've looked at options like prepaid funeral plans. And the biggest problem with those things is that, first off, it is a life insurance with an increasing, I guess you can say, a benefit, but the only beneficiary is the funeral home. So in this case here, you select the beneficiary of your choice, and then they can go to any funeral home and of their choice. And then at that point, whatever monies are left over, the beneficiary gets to keep. So you get to pick who that beneficiary is going to be, and they get to keep the remaining proceeds. What a lot of people don't understand as well, when it comes to final expenses, there's a lot more to just the direct cost of the funeral service and memorial service, the burial or cremation or mausoleum, whatever you choose. There's other costs involved. You usually have to close out debts. You have to move furniture. You gotta take stuff. I guess sometimes you have to put it in storage. There's just many different scenarios that come to play depending on each individual's family. But there's other costs that are not directly related to death, and that way, or should not directly related to the service that these extra funds will help cover. So, Joe, I don't know if you want to expand on that or.
No, but I mean, just when someone passes away, there can be unexpected costs that need to be paid. It could be even if your house is paid off, taxes could be due. You certainly don't want lose a house because of taxes not being paid. There could be a small mortgage. A final expense life insurance plan can also be used to pay mortgage premiums until the house is sold. So there's, like you said, Jimmy, you never know what's going to come up, but it's better to be prepared, and your family have the funds to be able to make those decisions without having the financial burden.
Okay, great. Thank you. Well, Joe, I really appreciate you coming on. It looks like most of our guests stayed on to the end. And
okay,
to our
great.
guests, I want to thank you for attending as well. We're going to open it up real quick. If anybody has any questions, you could hit the Q&A button down there on the bottom. If you want to get an illustration or get a quote for yourself, please reach out to me. You can send me an email or you can call me by phone. I should have had my contact information up there. But my phone number is 210-776-4600. And then I have a new email address. It's jimmy@mywealthcenter.com. So again, jimmy@mywealthcenter.com. feel free to reach out to me, email me, give me a call, and then we can get Joe involved, and we'll customize this to your specification. So with that, folks, again, thank you for attending. We'll see you on next week's broadcast. See you. Thank you, Joe.
Thanks, Jimmy. Take care.
Bye-bye. Oh, wait. There's a question, Joe.
Okay, I'm still on.
Oh, it just says thanks for the great info. All right. Thanks,
All right.
folks. We'll see you.
Bye.